Good afternoon, dear traders. So the theme is working with statistics. Let's start briefly and thoroughly. Okay, now my screen here. You can see it and such a picture. Okay, imagine a live situation. You go to the same restaurant where they cook well, but earlier you went to a nearby restaurant and you know that they cook there even disgusting. At the same time, the cook did not change. In fact, you have statistics that out of 10 times in 9, in a nearby restaurant they cook poorly. But in your favorite restaurant where you go every day from 10 times to 9 they cook well. So this is the 11th time. Which restaurant do you choose? Isn't the answer obvious? But in trading, the vast majority of people choose a bad restaurant with poor statistics. Why? Hope for a change. Another example, another picture. I'm not hungry, but it's imagination, it's visual. So now imagine that you go to McDonald's for a burger meal. One day, the restaurant decided to hold a meat festival by preparing a barbecue. And you suddenly decided that now they will cook barbecue in McDonald's every day. And this is what happens to traders when they rely on potential in the instrument. If the instrument did enormously yesterday $3 with average movement of 50 cents, then we understand that statistics of those who hope to get a similar movement today, tomorrow, and the day after tomorrow. Yeah? Simple. And now, charts. Of course. Any professional trading starts with statistics. Trading system settings and statistics with mathematics are necessary part. Tool movement, probability estimation, and again statistics and knowledge of the tool are necessary. Optimization of approaches, and here we will not go anywhere without statistics and mathematics. On the chart, if you understand that such a movement happens only in 5 or 10% of cases, then you should also understand the number of your profitable trades and mathematical settings of the trading system. You see how often such candles. And this is an average movement. And euro dollar. Now imagine that you are trading the euro against the dollar intraday and use a stop loss of 50 pips. After the fact, everything seems kind of beautiful, but this is medium term and with pullbacks, and you see it. So, in picture, this view quite understandable. But let's look at this picture. On the short-term chart, you will have something like this. And if you didn't come close to the key level and set a stop unreasonably in the amount of 50 pips, what is obtained from the statistics? You see, that most of the movements fit into the framework from 0 to 0.03%. This one. And this one. Or at best up to 0.6%. This one and this one. And this is statistics. This is more than 2,500 trading sessions. I don't think that anyone wants to argue with statistics. It's like trying to stop the train with your hands. The probability of such an event will be 4.7% of all cases. So if we're speaking about this one probability, that is, if a trader acts correctly, then the probability of receiving intraday potential is not more than 5% of cases. So if you decided intraday to use stop loss in euro against dollar 50 pips, and for example your aim 3 to 1 and 150, so your probability to get a profitable trade 4.7%. That is, it is immediately necessary in this option to prepare for a potential of at least 20 to 1 with drawdowns of 20-30 transactions. Are there any traders who work with this angle? The answer is yes, but you need to be confident in your mathematical side and not deviate from given numbers. That is, we again return exclusively to statistics and mathematics. You see how it's important. 5% and you need 20 per 1. If it will be less, you will lose your money. We are speaking about your expectation to get more than 1.5%. But what happens is not even a beginner, but already a trader with some experience. Then, again, mathematics and answers to questions. How to optimize trading approaches. Is it possible to increase the potential in a deal? How will this affect the percentage of positive transactions? Do these tools give the necessary potential from the stop loss? That is, there is a constant feedback from mathematics. Can a trader achieve a greater percentage of positive transactions? I'm sure that only with knowledge of the mechanic of price movement. Also, it is necessary to have experience and a feeling of market. Discipline, if we're speaking about psychology, which is more likely as a consequence of confidence in your trading approach. So, you see these numbers. If someone expecting to get more than 30 or 40% of positive transactions, it will be very hard as you beginner. It's obvious numbers for beginners, and you often see like a 3 to 1 as a potential. So your numbers will be very poor. And you need to optimize your trading system. You need to pay attention for instrument you are trading, which potential you need to choose, and how to raise your percentage of win. You see, without these statistics, your trading will be such a game. So you see, we briefly spoke about these nuances. So, okay, briefly, but informatively, today we made an excursion into statistics. Because it is not just important. This is what distinguishes a professional from a game player in the market. I hope that this information will help you deal with possible nuances in trading. After all, in fact, we all make the same mistakes with more. And there is simply no time to understand them. We are pursuit of monetary happiness, which is about to come in a couple of transactions. Your best thanks. I like this video. It was short video, but informative for you. Thank you for your attention and wish you professional growth in trading. Thank you.